Yeah, there's definitely a lot going on at the moment. I mean, the market kind of has already priced in 25 bips this week for the Bank of Japan. I think the bigger question, more importantly, is kind of what do they do next? I mean, it's quite easy for, I think, the market to maybe look at the Bank of Japan and say, okay, it's going to do 25 bips this week. You know, the next meeting, they're going to do another 25 basis points. So they're going to kind of be under pressure to tap out around that 50 bips level. I mean, that still leaves a very large differential between Japanese rates and US rates. So, you know, it could be quite easy for Forex traders to kind of look through that and still put the yen under pressure. I mean, we saw the results of Ministry of Finance intervention in the yen, you know, a couple of months back, and that is kind of a bit of a disaster, to be honest. So I still think it's a very, very tight rope that the Bank of Japan is walking, especially when you look at just how much inflation is biting in Japan. I mean, it's a country that's just not used to having these inflationary pressures. I mean, there's really nobody, you know, that's of middle age that kind of remembers what it was like to have inflation in Japan. We've kind of been in this stagflationary, deflationary kind of rut since the bubble burst. So, you know, when you look at, for example, Prime Minister Ishibala, one of the pillars that he ran on was this domestic and regional revitalisation. So, I mean, they're trying to kind of get these economies out of the big cities going again, and they're very, very sensitive to interest rates. So it's going to be a bit of a tough one, and yeah, but I think that they've almost kind of have their hands tied behind their back a little bit. They have to act, otherwise, it's we're going to sit. Yep.
Andrew, just wanted to, I guess, take it a bit forward in terms of the FX side of things. Last week in particular, because of the signalling we got from the BOJ, we did see some strengthening, but a dollar yen is still at around that 156 level, historically still very weak. What is your outlook for the yen, and how, in your view, is it going to impact Japanese equities, particularly the Nikkei 225? And how much of it do you think is related to some of the structural challenges? I'm talking about the demographic challenges that is seeing a lot of corporates now investing overseas rather than in the domestic market as well.
Yeah, I mean, it's kind of hard, right? Because it's very difficult, I think, for Forex traders to take a long-term bullish view on the yen. I mean, because you just talked about demographics. I mean, Japan is, you know, as a power in the region, I mean, you know, are we ever going to see, you know, dollar yen back at 100 again? I mean, a lot of this depends on what's happening in the US, of course, but I think from Japan's side of the equation, you know, the structural support and just the strength of the economy is going to be on the wane. I mean, there are a lot of very, very strong industries remaining in Japan. I mean, just have to look at semiconductors, for example, on the semiconductor production equipment side, factory automation. I mean, there's numerous industries that Japan has, you know, real tremendous, you know, presence in global markets. So it's definitely not over yet. But, I mean, people are just not seeing Japan as the safe haven it once was. I mean, when you look at, you know, again, going back to some of these inflationary concerns, I mean, purchasing power for Japan, you know, at 160, 155, 160, you know, it's tough, you know, when you're a country that has to import pretty much all of your commodities, you know, and it's, you know, there's all this imported inflation coming into the market. And, you know, I heard you talking earlier about wage growth. And that's all well and good, but with all this imported inflation that's coming in, it's still, you know, making it tough from an actual real consumption expenditure point.